Ladies and gentlemen, good day and welcome to the CCL Products India Limited fourth quarter FY23 results conference call hosted by Nirmal Bang Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand over the conference to Mr. Abhishek Navalgund from Nirmal Bang Equities. Thank you, and over to you, sir.
Thank you, Deepo. Hello, everyone. On behalf of Nirmal Bang Institutional Equities, I welcome all the participants to CCL Products India Limited Q4 and financial year FY23 earnings conference call. The management is represented by Mr. Challa Srishan, Managing Director, Mr. Praveen Jaipuriar, CEO, Mr. B. Mohan Krishna, Executive Director, Mr. V. Lakshmi Narayana, CFO, Mr. Sridevi Dasari, Company Secretary, and Mr. P.H. Rao, Consultant Company Secretary. Without further ado, I would like to hand over the call to Mr. Praveen for his opening comments, and then we'll open the floor for question and answer. Thank you, and over to you, sir.
Thank you, Abhishek, and good morning to everybody. Thank you, Nirmal Bang Equities, for arranging this call, and thank you to all the participants for joining us for this call. I'll briefly read out the results, and post which we'll open the floor for question and answer. As far as quarter 4 is concerned, the group has achieved a turnover of rupees 520 crores for the fourth quarter of 22-23. as compared to rupees 376.22 crores for the corresponding quarter of the previous year. And the net profit stands at rupees 85.29 crores as against rupees 52.69 crores for the corresponding quarter of the previous year. The EBITDA is rupees 115.47 crores and profit before tax is 94.7 crores. When we come to the yearly performance, on a year-to-year basis, the group has achieved a turnover of rupees 2071.21 crores. So we crossed a milestone of 2,000 crores this year, as compared to rupees 1462 crores for the corresponding previous year, and the net profit stands at rupees 268.87 crores as against rupees 204.35 crores for the corresponding previous year. The EBITDA is rupees 403 crores and the profit before tax is rupees 305 crores. So that was a brief snapshot of the results. I open the floor for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Kashyap Javeri from MK Investment Managers. Please go ahead.
Thank you so much, sir, and congratulations for a really great set of numbers. My first question is on our cash flow. Now after probably 2 or 3 years now, we have seen inventories coming under control. At operating cash flow level also, this has generated a great amount of cash for us. Does this now, do you expect this to continue as we go forward? Like you have been highlighting for quite some time, the overall working capital conversion, cash conversion, the cycle continues to get tighter.
This is Lakshmi here. To answer to your question, the cash flow statement, if you look at it, the best part of our operating cash flows are being used to generate the required working capital. So the amount of volume of the business that we should be able to achieve within the current financial year almost should be around 45% growth in terms of the revenue, which proportionately increases the working capital utilization also, and as well as deployment of the maintenance of the working capital changes. So going forward, whatever the remaining free cash flows that are going to be available, we are putting it to the ongoing projects and see that the capacities are built.
So, where we had this issues on inventory side because first the Russia-Ukraine war and then the coffee prices shooting up. Now that the global sourcing lines are sort of more free and the coffee prices have also come down. Ideally, the inventory number should not, or rather should remain under control.
The Ukraine-Russia war, it has no impact on the green coffee prices. If you look at it globally, the green coffee prices are moving upward as of now. So the volumes remain intact due to the increase in the GC price, the green coffee prices, which could make us to invest more into the operating cash flows into the working capital and the inventories to build up. And if you look at it, the inventories, we don't carry much of the finished goods inventories. We carry the green coffee inventories to take care of any uncertainties into the availability of the products.
And last question is, what is the number of customers that we added this year? New customers.
So, it's an ongoing process. Every day, every month, every quarter, we add the customers. There are some customers who would drop off. So, very difficult to kind of, give this number because every quarter, every month, these numbers would vary. There are, in every segment we have, from every geographies, we add customers. Sometimes we add customers which are absolutely new. Sometimes we add customers who were previously with us, probably would have dropped off at some stage and again get re-added. So that's an ongoing process, Kashyap, and we keep adding new customers all the time. But as we have already maintained for many calls, that if you see there are 50-60% of our volumes comes from the existing customers. And the rest of the volumes probably come from, either adding new customers or adding new volume to the existing customers, things like that. So that is the, answer from our side.
Okay. So you said 70% of the revenues from existing customers and balance should be new customers.
50 to 60% from the existing customers, and the balance keeps coming from addition and, because it's always a, leaking bucket wherein some people will drop off, new people will come in. So that's the nature of the business.
Okay. And just one more question. Can you give a breakup of the revenue in terms of Europe, CIS, US, India, and rest of the year?
If I were to tell you broadly, CIS countries contribute almost to 20 to 25% of our volumes, and Europe is anywhere between 12 to 15%. So that's the breakup between CIS and EU. Domestic market included, Asia becomes the largest because a large part of it also goes to domestic market. So that's the breakup. North America is almost, again 12 to 14%. So that is North America. So if you add up all of these, you'll see that, adds up to 100%. So that's the broad breakup of the geographies that we operate in.
Right. Thank you so much. I have more questions, but I'll come back on that.
Sure.
Thank you. Our next question is from the line of Amar Maurya from Alpha Accurate Advisors. Please go ahead.
You can give us a broad, understanding about how had been our volume growth in this quarter, and how was the volume growth for the year, and what would be the expectation for the next year in terms of the volume growth, given that a couple of capacities will be also coming up.
Volume growth for the quarter and the year, they all stood at a very, consistent level. We had earlier indicated that we will end the year at around between 20 to 25%, and we ended close to, a little above 20% volume growth. and we got another 20% value creep. So if you see our annual turnover growth is around 41%. And the guidance for the next year is also very close to this. We are looking to grow the volumes at around maybe 20% or so, couple of percentages here or there. But that's the guidance we are giving. And this year probably we may not get such a higher clip on the prices because base prices are also pretty high. And a lot will depend on how coffee prices move during the year. So as we go along, we'll be able to give you sharper guidance on the value growth. But broad volume growth guidance is close to 20% for the next year as well.
Okay. And what would be volume growth for this quarter, sir? Around?
This quarter also we were similar, as I told you, because all 4 quarters were very similar volume growths between 20 to 25%. So this quarter also the volume growth was close to 20%.
And sir, this Vietnam capacity of 16,000 metric ton, let's say, how do we expect the utilization for FY24, the new capacity which is coming?
So, we already started utilizing the new capacity, and for the year, if you see, the guidance is almost 50% of the new capacity will be utilized in the current year.
Okay. Perfect, sir. And secondly, next year, one more capacity for Vietnam will also come, right? Another 16,000, correct? No. For India.
No. So by this year end, probably, there is one more SD capacity in India, which is 16,000 tons. And next financial year, by Q2, we will have a freeze-dried capacity in Vietnam, which is close to 5,500 metric tons.
Correct. Okay. And that capex basically broadly remain on the track, right?
Yeah.
We don't see it. Okay. Perfect, sir. Thank you.
Thank you.
Thank you. Our next question is from the line of Vidit from IIFL Securities. Please go ahead.
Hi, thanks for taking my question. Could you just share the capacity utilization that we achieved in the Vietnam capacity in 4Q when it was commissioned? Because it looks like a lot of the growth this quarter has come from Vietnam or from the subsidiary business. And just wanted to get a sense of what has driven this growth in EBITDA, ex-standalone EBITDA.
So you're right, a lot, the additional capacity that we got this quarter was because of the expansion that we did in Vietnam. So we could utilize certain capacity from Vietnam itself, and that is why we got robust growth on this quarter, which meant that, the EBITDA percentages, the profit from the NCL unit was very robust this quarter, which added to our the company's growth profile. But this was all projected. We had factored all of this in when we had projected annual 20% or so volume growth. And this was because we knew that the commissioning would happen by the last quarter. So all this growth was factored in. That had led to a driven lot of growth for us in the last quarter.
Okay. So what is the capacity utilization across both the countries in India and Vietnam?
So if I were to, remove the new capacity, because it's only half of the quarter that we use the new capacity, so exact capacity utilization it would be a wrong picture. But let me break it up. The previous capacity, so that was almost 100% utilized. When I say 100%, obviously it is not 100% rated, but it generally would operate between 85 or 90% or so because of the various blends that you use, changeover and things like that. So almost all of the capacity the previous capacity was utilized. And this year, from the new capacity, which is 16,000 tons we added in Vietnam, we are looking to utilize another 50% capacity out of that 16,000. So another 8,000 or so should get added, and that is what will drive the 20% or so volume growth that we have been talking about for the next year, or current year.
Okay, understood. And in terms of, just overall demand, freeze-dried demand has been under pressure. Do we see this trend changing anytime soon, or these volumes of freeze-dried and margins continue to be under pressure? Right?
I don't think so. Demand was under pressure ever because we operate mostly the clients whom we give to, because we are doing instant coffee. A large part of consumption of instant coffee is in-home consumption. So we haven't seen any contraction in demand. Even during COVID period, we did not see any contraction of demand. So while out-of-home consumption did undergo through a stress, but in-home consumption was always intact. So we haven't seen any contraction in demand. Yes, when the coffee prices went up for a short period of time, freeze-dried because everything, the prices went up. So there was a little down trading from freeze-dried to, let's say, spray-dried at a consumer level, which led to a little pressure. But what happens at the consumer level over a period of time when the price hike happens, at that moment probably there is a little stress. But over a period of time, we all know as consumers, we kind of accept these price increases over a period of time. And that's what has happened, and we are not seeing any contraction in demand even in freeze-dried as of now. In fact, our freeze-dried capacity is 100% full for the next 1.5 years, and we are seeing pressure of demand from that segment as well. So we don't see any apparent demand contraction going forward. Unless until something drastic happens, but as of now, we are not seeing any demand contraction.
Okay, and just one data point that if you could share on the retail business, what sort of revenue did it in FY23, and what are we projecting going forward?
So, in FY23, the whole domestic business crossed a turnover of around 250 crores. And the pure brand out of this was around, close to between 150 to 160 crores. And the rest was bulk and private label. So that is there. And we are looking to continue the growth momentum. We're looking to, this year also, we are looking to at least drive a growth of around between 30 to 40%. And that's what we are aiming for this year as well.
Sorry, I didn't get the number of revenue. Did you say 280 crores?
250 crores, I said.
250 crores, of which 50 to 100 crores was the private label, is it?
No. Out of which 80 to 90 crores was, private label and bulk. Okay. And 150 to 160 crores was pure brands.
Okay, and just one last question, if you may allow.
Mr. Vidit, may we request that you return to the question?
Sure, I'll get back in queue. Thanks.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Thank you. Our next question is from the line of Mayur Patel from IIFL AMC. Please go ahead.
Yeah, hi. Thanks for the opportunity. Can you just share some thoughts around how are you seeing the demand supply, which can lead to the change in the coffee prices going forward? And just adding on to it, our business, as you have always explained in the past, is more of a spread business. So there's a 20% plus volume growth expected for the next year. Even if the coffee prices say decline theoretically by 15-20%, we should expect spreads to be maintained in a 20% plus EBITDA growth. Is it a fair expectation?
Yeah. So the second part I'll answer first, which is the EBITDA spread. So, as we have always maintained, our EBITDA growth is always in line with our volume growth. So even if the coffee prices fall, if our volume growths are, close to 20%, even our EBITDA will grow at 20%. So that, that logic always gets maintained. The only difference that comes is in the top line, which is the value numbers. So it will all depend on what is the kind of prices there, and we'll add or subtract that kind of a prices on our volume growth. So that's the only variable factor. Otherwise, sorry.
Yeah, that's all. This is reassuring. Anyway, the top line, the EBITDA growth is more important than the top line growth, like you rightly explained. On the first part, if you can just help us just for our understanding, how do you see coffee prices going forward based on demand and supply factors?
I'm just Srishant to fill in here.
Yeah. So as far as coffee prices are concerned, this is actually quite complicated because in fact the previous estimates that were there was that with the new crop that's coming in Brazil, it's a very good crop, so in fact the prices should be going down. But instead, what happened is in Vietnam, in Indonesia, and other locations, Robusta prices, there's a lot of demand for Robusta also, which has increased, which has actually driven the prices upward. When the Arabica prices started going up, automatically there's been some transition towards Robusta, which is where the Robusta also is under pressure. In fact, as of now, we are seeing kind of like an all-time high prices at this point in time. We are expecting this to slowly soften once the new crops start coming in from Indonesia and then subsequently from other regions as well.
Okay. This is pretty good, reassuring. Thanks, Srishant. Just one more question, if I can squeeze in. We have seen some good improvement in working capital. Are there more legs to this? Should we expect some more improvement in the net working capital cycle going ahead?
So working capital is one thing. See, because the prices are going up and fluctuating the way it is, frankly, it becomes a bit premature for us to comment whether there will be an improvement or no. We've always taken strategic calls based on the market fluctuations. So there are times where we find it's more economical to secure the raw material and block our working capital if we feel that the prices are still going to shoot up. Because otherwise, the kind of prices that we get, whoever is quoting us, they'll add their working capital cost and then quote to us. So this is something that it keeps changing from time to time based on how the markets fluctuate.
Thank you very much. All the best.
Thank you.
Thank you. Our next question is from the line of Nirav Savai from Abacus AMC. Please go ahead.
Hi, so my question is regarding the depreciation part. And this quarter, we have seen a depreciation of about 10 crores versus 19 crores in the previous quarter. So has anything changed there? There's a lower depreciation despite Vietnam facility, which is commercialized operation this quarter.
Yes, if you look at it, some of the old assets have been completely depreciated, and the new capacity that are coming to operation has been capitalized on end of March, and that's the reason why you could see the reduction in the depreciation in the current financial year. And the next financial year, having capitalized the expanded capacity, and we will see the more depreciation in the 23-24.
Okay, so this quarter, the new capacity depreciation hasn't come?
No, this quarter 1 of 2024, new depreciation, new capacity depreciation will come.
Right. Also, so the new expansion which we are doing on the India side, that is expected to commercialize operation in first half, or it would be in the second half of FY25?
In the implementation will be scheduled to close it by end March 24, and the commercial operations begins in the first quarter of 24-25.
Okay, so Q1 of FY25 it would commercialize operations.
Yes.
And the new freeze-dried capacity in Vietnam would be also in FY25, or it's going to be in 26?
So it is in quarter 2 of 25-26. 24-25 we are likely to complete, and having completed the schedule to complete the trial operation. So sometime in 24-25 financial year end, we may come into commercialization.
So by the fourth quarter of FY25?
Yeah, fourth quarter of 25, and the real-time difference of being between in 25-26 onwards.
Okay, so you are saying it will commercialize operation on 24th quarter of 25, but 26 Q1 onwards we will see some...
Third quarter of 25, it will be commercialized.
Okay.
And the real-time impact of the new FD facility will be seen from 25-26 onwards.
Right. Got it. That's it from this. Thank you.
Thank you. Our next question is from the line of Lokesh Maru from Nippon India Mutual Fund. Please go ahead.
Thank you for the opportunity. Congratulations on a healthy set of numbers. Just one question from my side. Could you please help with EBITDA per kg for the quarter and for the year overall?
Sorry, Lokesh, we're not clear you. Can you repeat your question?
Hi, can you please help with the EBITDA per kg for the overall?
So, Lokesh, EBITDA per kg did not change much from where we spoke last time. So if you were to recollect, because our volume growth and EBITDA growth, if you see, are pretty much in line. So exactly, same per kg profits are there. So for spray side, it's in the range of 90 to 100, and for the freeze side, it is 130 to 140. That continues to remain as it is this year as well.
Okay, so the 34% increase in our EBITDA year over year this quarter means the volume growth was 34% this quarter.
Just don't go by very, very finer this thing. So there will be some variations and variances up and down. But if you were to look at a broad sense, like when you see the annual numbers, you will see that because in quarter to quarter, if you do very myopic comparisons, you'll start seeing these differences because there are certain delayed supplies or certain delayed shipments. So or mix changing. So a lot of these things happen which kind of affect the EBITDA per kg. So it is best to look at from a long-term perspective. But so if you see the yearly perspective, exactly the same volume growth and EBITDA growths are there. We said 20 to 25%, closer to 20% for the volume growth, and so is the EBITDA growth for 21%. Yeah, but broadly, Lokesh, this logic works for us most of the times.
Sure, sir. Understood. One more thing on our branded business, which, if I recollect correctly, could be 175 crores for the year. Where do you expect this to be in, let's say, FY27 per se, from 3-year perspective? You see it growing 30 to 40%. Does it mean you want it anywhere around 300 crores or so in 3 years?
I was expecting that you would ask me this year. You kind of stumped me there in year of 27. Yeah. So, Lokesh, as we've been maintaining at the start of the year, we had projected something close to 170, but we were a little short than that, around close to 155, 160. But as you would recollect, we had mentioned that we are taking a lot of correction of stocks in the market, financial discipline and things like that. So we purposefully kind of held our primary sales this year. But going forward, but in spite of that, the business grew by 25%. Going forward, we are maintaining that anything between 30 to 35% should be our growth projections for the coming years, at least 3 years or so. And however, as we speak, it's a very dynamic business. Consumer business we are just in the building space. So there could be, quarters or years where we would probably, grow at higher levels or at a lower levels. It will depend on a lot of things. The competition is heating up because we've now got a decent share in the market. So all that will come into play. So we'll keep you informed. But at a broader level, you're right. We are looking to kind of grow at this pace of 30 to 35% for the next 2 to 3 years.
Sure, sir. Understood. Thank you so much and all the best.
Thank you, Lokesh.
Thank you. Our next question is from the line of Dhiral from Phillip Capital PCG. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. Sir, this year we have seen a lower effective tax rate for FY23. So what could be the run rate for FY24 and 25, sir?
For the lower effective tax rate, there is one reason that the new facility which we have created, packing and agglomeration facility, that capitalized in the current financial year, thereby we could claim the additional depreciation which leads to fall under the MAT. comparing with the regular tax in the current financial year. And the new year, the current financial year, it is likely to fall around effective tax rate of around 25%.
So this is despite Vietnam contribution going up, sir, because this year maybe 20% of growth will be come from Vietnam facility, right?
Because it is like this, so the effective tax rate, if you look at it, one unit in India, it was the full tax rate of 34%, and the second unit is exempted, and India, Vietnam operations are exempted. Keeping all these in view, we expect the effective tax rate to fall between 22 to 25.
Okay, and sir, if you can give the overall Vietnam revenue, EBITDA and PAT for the year, and same for the Switzerland, unit.
It is a significant contribution to be there from Vietnam, having completed the expanded capacity, and proportionately the contribution as well, it will go in the consolidation level.
Okay, but sir, if you can give the data, sir, for the Vietnam overall revenue for the year and EBITDA and the PAT.
The current financial year talking about?
Yes, FY23.
So FY23, we are at around 40% of the total revenue. It is coming from Vietnam operations.
And sir, PAT will be?
Pardon? That will be around 140 crores.
140 crores. And sir, if I see your other expense in Q4 was higher by 56% on a YY basis. So any particular reason for that?
There is no much of increase in the Q4. If you look at it on the Q4, the expenses are 180 crores in Q4 versus 107 crores of Q3. There is no much of increase in other expenses.
Sir, on a YY basis, from 75 went up to 118.
Yeah, on YY basis, if you look at it, the volume growth, it is almost around 20%. And if you look at it, 310 crores is other expenses of 21-22, that means 428 crores. If you look at it, around 25% growth, volume growth, that equally compensated in terms of the increase in other expenses as well.
Okay. Thank you so much, sir.
There is no disproportionate increase if you look at it.
Thank you. Our next question is from the line of Aegis Lakhani from Unifi Capital. Please go ahead.
Yeah, just wanted to understand that the capex for next year and how you're likely to fund it, and how should we expect the debt levels to be in FY24, given that you're generating strong cash flows as well.
We know that we are going with a new facility for 16,000 metric tons FD capacity in India, which is likely to cost around 400 crores. Out of that, we are contributing around 80 crores from our side, and the balance is going to be raised in the form of the debt funding. So this is what we could see in the year 23-24.
Okay, so from the 900 crores of debt that is outstanding, is it fair to understand that debt should peak out at 1,200 crores? Because you're generating significant operating cash flow as well, so I would assume that some of it will come in the form of that as well.
Yeah, you're right.
So peak debt will not be 1,200; it could be much lower because you will compensate it with a mix of your own cash flows.
That's right. Our cash flows also gets contributed in that, and that will be that reflection can be seen in terms of working capital utilization side.
Got it. And secondly, in terms of could you quantify any new orders, that larger orders or any order wins that you're expecting in, or is it just the existing customers giving you incremental volumes, or anything new on the annual?
So at any point of time, there are 5-6 clients in the pipeline. And as I was telling earlier as well, that it's we have a setup where almost 50-60% of our volumes come from regular business, our regular clients. and the rest is almost like a leaking bucket where new clients come in and some of them drop off. So that's the nature of the business at this point of time. Very difficult to share. We generally don't share. These are confidential information about our clients. So we are not, supposed to share. But at any point of time, as I'm telling you, there are, 5, 6 client projects in the pipeline, and some of it materializes, some of it doesn't. It's an ongoing process that keeps on happening.
Got it. Thanks a ton.
Thank you. Our next question is from the line of Rahul Maheshwari from Ambit Asset Management. Please go ahead.
Thank you so much, sir, and excellent set of numbers. 2 questions. Primarily, can you give some guidance on the premium products, which cold brew products, a couple of quarters which you had given the inquiries were strong enough, how much they are contributing such kind of products, and connected to this, again, a small packaging which we commenced 12,500 ton. What is the color? Can you give some color on that? What is the capacity utilization and how much extra premium can we fetch compared to the bulk products which we are selling?
So, the niche products, as we may call it, things like cold brews or specialty coffee, things like that, which are premium in nature, will almost contribute 5 to 10% of our volumes. Yeah. So,
on value terms, it can be?
Yeah, I'm talking. So, volume, if volume is 5 to 10%, the value could be 10 to 15%. Yeah. So, it will give us a higher value realization from the others. So that is on the niche and the premium products, as we may call it. And as far as our small pack capacity utilization, see, almost for the full unit, if you were to see 30% of the capacity utilization happens from the domestic market side, because domestic market is all small packs here. And we have got another rest 20-25% coming from the international market. So almost 50-55% capacity utilization is there. And this is when I talk about the machines, as we have told earlier also, there are certain SKUs where capacity utilization is pretty high. So for example, if I were to take sachets or pouches, there we are almost in some SKUs 100% capacity utilization. There are certain SKUs probably where the capacity utilization is 20%. So as a whole, we are 50 to 60%, at 50 to 60% levels of capacity utilization in the new packing unit.
But on the export side, how much value addition which we are trying to capture through the small packaging compared to earlier when we were not having the small packaging unit in terms of realization?
No, we were having a small pack facility, but it was, a part of the Dugirala facility. We now created a separate unit altogether so that we can have a full-fledged facility which is state-of-the-art to supply to our clients and also help us get new clients. So that is there. As far as margins are concerned, you had asked how much does it give you. Almost 10 to 15% additional margins we get due to this value addition. And that was one of the reasons we had set this up, because we thought that if we could provide turnkey solutions to our clients, not only it helps the client, but also helps us earn more margins.
Sure. Just a second question. On US, last year we completed almost, just correct me if I'm wrong, 8,000 ton type of capacity. In current year, FY23, how much capacity or we have added over there, and what is the outlook can you give on the US side? And second thing, on the sourcing of green coffee apart from Vietnam and India, Africa is the market where we are looking at of sourcing of raw materials. Thank you.
Yeah. So, okay, 2 questions. The first thing is, I think that the US numbers are not correct. I don't think so. We said 8,000 tons. It was close to 4 to 5,000 tons, and that's the volume we are doing in the US market. We are looking to acquire more clients. So as and when we get certain, growths here, we'll keep you informed. But that's the level. It's almost, 10% to 12% of 10 to 15% of our business comes from this market. The second question you asked about coffee sourcing from Africa, we already do a lot of coffee sourcing from some of the African countries like Uganda and all. And, as we have told you, we operate on two things. Where do we get the coffee at the best price? And second is, depends on the client needs. If the client needs a certain type of coffee to be sourced from a certain origin, we continue to do that. So for us, there is no, no binding or no this thing that we have to source from here or there. And we do source from African markets as well.
Sir, just connected to this, when we are diversifying our sourcing mix, any realization benefit we get compared to Vietnam and Africa?
No, not really. Not really. So if the realization benefit, you can't say. It really depends on at that moment when we are doing or finalizing the deal, where is the place where we are getting the coffee from. It also depends, it's a complex thing. It also depends on the blend, what kind of blend the client wants. So if the client wants a certain blend and I know that I can only get this blend from a certain type of coffee, very difficult to kind of go and source from somewhere else. So it's a complex situation which 2-3 things determine where do we source from. One is blend, of course. The second is, okay, if the blend, we have a provision wherein a type of coffee can be replaced by B type of coffee, then we say, okay, which is the best, pricing that we are getting from, which source is the best pricing. So all of these factors, come into play. It's a complex thing, and that is where we develop our, a competitive edge from others. And that's how we'll keep on operating in the future as well.
Thank you so much, sir, and best wishes. Thanks.
Thank you.
Thank you. Our next question is from the line of Himanshu Nair from Systematics. Please go ahead.
Yeah, hi, sir. Congratulations on a good set of numbers. So firstly, just from this quarter perspective, we see significant divergence in performance in the standalone business and console. So India and Vietnam seem to be going in very different paths, especially on the margin front and even on the growth front, where growth in standalone looks much higher. So are both these things just on account of base effect, as in base in India was lower on the revenue side same time last quarter, and similarly on margins, or is there anything more to read into that?
So hi Himanshu, 3-4 things here. Vietnam, of course, the thing got commissioned in March, so we had some volumes of that month to give us that better growth. Base effect a little bit is there. If you remember last quarter, there were certain freeze-dried volumes which got a little delayed. That's when Russia-Ukraine war had started. So, that was pushed to the next quarter. So a little bit of base effect in that. The third thing is that, we have been speaking about this because of higher demand and our constraint in supplying or producing coffee. We had outsourced coffee also. So that also, added to our volumes in the last quarter. So all of them put together has given us growth. So therefore you'll see good growth here in standalone and as well as NCL.
And on the margin front also, if you can explain the significant divergence, as in margins are down sharply in standalone and up sharply in Vietnam.
Yeah, so outsourcing led to reduced margin in standalone. And Vietnam, of course, there won't be much of an increase per se. There could be certain things which would have worked in our favor in terms of, the capacity, last month capacity getting added, that would have led to better economies of scale and therefore better margins there. So these are the factors which worked in our favor and not in our favor in standalone.
Got it. Second bit also on the India business, if you can just give us some updates on the profitability of that business, whether we are starting to make money out there, and any updates if you can share on our new ventures that we were looking at, entry into foods, the coffee vending machine business, or any other updates you would want to share non-coffee, apart from coffee, whatever we were doing.
Yeah, quickly. So here, as I was telling a few moments ago, the India business, we did around 250 crores. Out of these, the branded business was 150 to 160 crores. Yeah. And this is approximately 25% growth over last year. And we continue to kind of put our bets onto the branded business and look to grow at 30 to 35% in the next 2-3 years at a CAGR level. So that's the expectation. When it comes to entering into new categories, we already are expanding Greenbird. The sales are right now, slow because of the fact that it's a new category. People are yet learning about the category and the concept. But the good thing is there are some certain pockets where we are getting, nice responses, repeat purchases and all. So from a 3 city, we have now already expanded to 6, and we're looking to expand into another 3-4 cities very soon. As far as some of the other categories, right now we are focusing on coffee and the Greenbird. Yes, in the back end we are working, evaluating, the categories. We are trying to find out are there some gap areas or spaces for us to enter. So all that work is happening in the background. Can't share them right now. But at an opportune time, we'll let you know that if there is any plan for us to enter into these categories. Coffee vending business, yes, we are looking to be aggressive. We are always getting, new clients into our fold. There are many clients who are now, we are, installing machines on a pan-India basis, and these are large clients. There's some tech clients where we are installing almost 500 machines for the same company across their offices in India. So that will be a foray we will be aggressively pursuing on. So that's a little update on the various things that you would ask for.
On the profitability, if you can just comment on
the profitability. So as we had told earlier, that since last year on an MIS basis we have been breaking even. And the reason I say MIS because earlier we were working on a transfer pricing basis, and that's the reason we are looking to demerge the company into the parent company so that we have more resources to expand the business. But if you were to look at MIS business last year itself, we had made a certain level of profit. This year we have made profits, and going forward we will keep on making profits. But the thing is that we are not looking to drive a lot of profits and profit generation from this business because it's a branded business, and we do feel that another 5 to 10 years we need to keep on investing on this business, and especially considering that we are looking to not just stay in coffee but expand into other categories. So I'm not seeing a lot of money generation from this setup. But yes, there will be certain money generation that will keep happening year on year.
Yes, and final question on a bookkeeping one if you can just let us know on the current rate of interest on the expanded debt that we'll be sort of paying post the recent hike in interest rates, and the rate of depreciation, if you can just give us a run rate going forward.
The rate of interest towards the working capital, it has gone up to an effective rate of interest from 2.5% to 6%. And as we all know that the international pricing also has been changed, which are linked with so far, and that also earlier it was linked with LIBOR. It has gone up from almost around 3% to almost to 7% in the particular mix. So as a whole, if you look at it, around 6% is the effective interest rate as of now on the working capital, and the term loan it is likely to be somewhere around 8%. If you like to work it out for the capacity that you are likely to increase.
Sorry, sir, you said 8% on the term loan.
Yeah, and coming to the depreciation days, this will be followed as per the company chart, and the effective straight line method of depreciation, it works out around 10%.
So the current quarter rate should surely increase from the 10 crore that we had this quarter, right, sir?
That's right. The quarter one, where at non-coffee, where we have completed the expansion, increase the depreciation will come into force from this Q1.
Right. So any number you can let us know as to what should be the run rate now, at least for the next few quarters for depreciation?
The depreciation is likely to increase almost around 7.5 crores per quarter.
So 17.5, you mean 10 plus 7.5?
7.5 crores and
understood.
7.5 crores per quarter.
Oh. Got it, sir. That's it from me. Thanks and all the best to the team.
Thank you. Our next question is from the line of Devanshu Sampath from Avendus Wealth. Please go ahead.
Yeah. Hello, sir. Good morning. I just had 3 questions. Sorry, one second. So your comment on the clients dropping off, right, on a regular basis, 30-40% seems to be a fairly higher number, especially for a business where I would presume the clients to be sticky. So is this churn mainly from the the bulk or the middlemen that we were trying to sort of cut out from, or can you throw a bit more color on this?
Can you just repeat? I didn't get you. You're asking about 30-40% churn of the.
You said not, our regular clients are around 50-60%, that we keep getting a business from, and the balance, are people who keep dropping off. So this would constitute, what set of clients? Are these the unbranded bulks or the middlemen that we were sort of, cater to?
Let me just kind of rephrase it. So when we say 40%, so 40% is, it's like new clients coming in. There are certain dropping in, and sometimes with the old clients itself, from where we get 60% of the business, we may get orders for new variants or a new product. Somebody who's buying freeze-dried could end up buying spray-dried and things like that. So that is the thing, and I don't think so it's a very high number, because if you see any business, probably this is the kind of churn you will have with the new set of people coming in and the old set of people going out. Now, generally speaking, the clients who are the brand owners, they generally don't drop off, because what happens is that we have a very particular blend for them. We have a connectivity with them. They are selling it to their consumers, so they don't want to risk any product change or any slight deviation in the product. So these are pretty, continuous clients that.
Ladies and gentlemen, the line for the management has dropped. Please stay connected while we reconnect them. The line for the management is reconnected. You can go ahead.
Hello?
Yes, sir.
Devanshu, can you hear me now?
Yeah, I can hear you.
Sorry, I didn't realize when the call got disconnected. I'll just repeat the thing that I was saying. So what I was saying is that, the brand owners generally are very sticky with us, because they are serving to their consumers. They don't want to take a risk. It's the people who are, or traders or middlemen, who are buying very base product of coffee, very run-of-the-mill stuff, who are looking for price advantages and looking for, cheaper coffees. These are the people who kind of keep adding in, dropping in, and we do have a certain amount of business which keeps coming from them as well. So, of course, these are the people, wherever they get a price advantage, they kind of keep coming and going, and that's the reason I said that it's like a leaking bucket. And most of these people, as you rightly pointed, are like traders and are like, middlemen who are just looking for deals. So these people are the people who drop off.
Got it. And
they also keep coming back. It's not that they find that they're getting lucrative pricing from us, they'll keep coming back and going off. So, that's 20% of our business is like that, and they keep it keeps happening all the time.
Okay, that's around 20% of the business. Okay. And you mentioned this 5 to 10% share of value addition that we are doing right now. So can you give a sense on how you see this number going up over a 2-3 year period, especially with the discussions you're having with the clients right now? Any sense you can give us?
So yes, there are, in our previous call, we had mentioned that we are commissioning a pilot plant, which is a, small plant which includes small quantities. Generally, till now, we haven't been able to do specialty coffee because of the fact that the MOQs were large and a lot of clients would look for smaller quantities. So with this pilot plant in place, we also participated in some of the specialty coffee fairs in US, and there has been a lot of positive response. So we are looking to kind of increase this premium and the specialized coffee segment for us. Now this pilot plant or the mini plant will help us, further strengthen our play into this area. So there are talks going on. We have submitted samples with a lot of clients who were looking for such kind of coffee. As and when they keep materializing, we'll keep informing you.
So if and when we do get business from this, will it require us to set up additional capacity, or we can service them?
No. Generally, when the specialty clients, coffee seeking clients, they generally need coffee because it's a premium product, it's a specialty product, and it's a niche category. So they need it in small quantities, for which we have made a pilot or a mini plant, which has got, we have now got the capability to make coffee from this mini plant.